Bitcoin falling today, but it's up more than 30% in the past month. Many of those gains attributable directly to President-elect Donald Trump's victory at the ballot box, as you can see some of the price action there on the chart. With more people interested in holding crypto or adding to their positions, we're bringing in an expert to discuss the tax side of your investment. Joining me now, we've got Andrew Gordon, partner, tax attorney, and CPA at Gordon Law. Andrew, always a pleasure to grab some time with you and get some insights here. All right, so for those who have seen gains in their crypto, especially in the closing weeks of the year, what does this mean for their taxes come 2025?
Well, for those of you that are holding Bitcoin, you've almost certainly seen gains already, although we've seen a slight drop today. This week, we've been at all-time highs and even seen some of the largest single-day growths. But if you're holding crypto, one of the good pieces of news is that you're only taxed when you sell or exchange. Bitcoin is taxed much the same as stocks or other property. So when you sell, dispose of it either for cash or even for other cryptocurrencies, that's a taxable event. But there are ways that you can minimize that tax. And one of the best ways before the year end is to harvest losses from other tokens or other property. So although your Bitcoin sales may be at all-time highs, if you have other property or stocks that are at losses, now may be a great time to harvest those losses to use against those Bitcoin gains. Another great strategy is to hold for long term. Crypto is taxed just like stocks with short and long-term gains. So if you can hold for longer than a year, you can greatly reduce your taxes.
And so what is that tax rate? And ultimately, how should people look at their holdings and say, or apply a general kind of rule of thumb to say, okay, if I have not exceeded this percentage in gains, then I probably shouldn't be looking to sell right now, because if I have to pay taxes on that, then that's going to wipe out much of the gains.
Yeah, and you're spot on, Brad. As your gains increase, typically your tax rate also increases as well. And with cryptocurrency, just like other stocks, you're taxed on the gain. So the difference between the original purchase price and your later sales price. With crypto, there's short-term and long-term, and your short-term is taxed at your ordinary tax rate. And your ordinary tax rate increases as your income or gains increase. So one of the things that you might want to do before year end or before executing on a sale or trade is to consider if it's going to push you into a higher tax bracket. Because if it does, it might make sense to wait to the next year.
When we think about the taxation of Bitcoin and what has been the definition of the IRS's kind of classification of crypto as property, how should people also be thinking about future purchases that they want to make in crypto and the percentage of crypto that really kind of makes up their overall portfolio of investments?
Yes, so you should make your own investment decisions as far as how much crypto to hold relative to other investments. But what we're seeing is that Bitcoin and cryptocurrency is being treated more seriously than ever before, especially with the incoming Trump administration. A lot of people believe that there may even be a Bitcoin reserve. So now might be a great time to consider investing in Bitcoin if you haven't before. We're expecting to see a loosening of regulations and hopefully greater clarity on how the crypto industry is to run. And with that, hopefully price increases will follow.
Do you think that the establishment of a Bitcoin reserve, or at least a larger, more formalized holding, because the U.S. actually owns, compared to other countries, already owns the most Bitcoin when compared to other countries around the globe. I think it's something in excess of or north of 200,000 Bitcoin versus the next closest country in China that has about 190,000 at this juncture. So all these things considered, do we expect the establishment of a reserve to then ultimately change the way that crypto is taxed if we do see the administration prioritize this?
Well, I hope that it will bring a new focus to many of the tax issues that have been occurring in crypto. One of the distinguishing points between crypto and stocks is that crypto investors need to report by themselves on their own. There's no 1099-Bs filed, and if you don't do it right, you can have severe penalties. Hopefully with the establishment of a Bitcoin reserve, the federal government holding Bitcoin on their balance sheet, there will now be a need for greater regulations, greater clarity, And with that, adoption will also follow. So hopefully it will be a good thing.
Just lastly here, Andrew, and we only got about 30 seconds. What if you have a small business and you decide to put your crypto holdings on your small business's balance sheet? Is there any major difference there between how you're filing on that kind of tax entity?
Yeah, that's a great question, Brad. And one of the things that catches a lot of people off guard is now on your tax return, there's a yes or no question, even for businesses, if you have crypto activity. It's that important for the IRS to know. So the biggest thing is making sure that you answer that question correctly, but also have a tax professional that understands crypto, because it is held and treated a lot different than things like currency or US dollars.
Andrew Gordon, who's the partner, tax attorney, and CPA at Gordon Law. Andrew, always a pleasure to grab some time. Thanks so much.
Thank you, Brad.